The Bank of Canada chickened out and only increased the interest rates by 50 basis points or 0.5%. Yeah, that happened. See, the market originally thought we are going to get 75 basis point, and that was definitely coming given the inflation print from US and Canada, but Bank of Canada did not follow through. So I'm going to go through what this means and what I think we should be expecting in the real estate market because of this 50 basis point. Now, if you are looking for some expert guidance on how to navigate this wild market, because it is very wild right now, and especially in a wild market, you want someone who has experience, not just, who got their license a year or two ago, because we're in turbulent times right now. And you want to talk to a true expert like this guy, you can book a call with me using the link that's on the screen. It's right here, www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run a Remax brokerage in the Greater Toronto area, on top of making awesome educational real estate content just like this for you. And yeah, you heard me in the intro. Bank of Canada chickened out. Yeah, I'm calling you a Bank of Canada. Come at me, bro. While I thought we were going to get 50 basis point hike for probably a very long time since I think the last hike in September 26th, after seeing the latest inflation in US and Canada, I start leaning towards, maybe we'll get 75 basis point because the core inflation wasn't coming down. So the market was also there, and here we are. They did not follow through and they chickened out. And let me be clear and upfront, just because they didn't do 75, it doesn't mean they're pivoting anytime soon or we're going to see a rate reduction, because they're still paying at these high interest rates. But let me read you what they said in their remarks. I have it somewhere over here. Higher interest rates are beginning to weigh on growth. Thanks, Sherlock. That was me adding that, okay? This is increasingly evident in interest-sensitive parts of the economy like housing and big-ticket items. And it goes on to say, they expect growth will stall in the next few quarters. In other words, growth will be close to zero. But once we get through the slowdown, growth will pick up. Our economy will grow solidly, and the benefits of low, predictable inflation will be restored. Look, I don't know who they're trying to fool. I don't think many people believe that they're saying that we're going to get a soft landing and it's actually going to happen, nor will predictable low inflation be restored. I mean, I think they mean 2% by that, but come on, let's be real. It's not coming down to that. And then here's the last thing that they said, which I think is important. This tightening phase will draw to a close. We are getting closer, but we are not there yet. That's the important part. Meaning more rate hikes are to come, right? So the next final rate announcement or rate hike announcement is in 2022 in December 7th. That's the last one for the year. And historically, we've never hiked the rates in December, but who knows? The world's upside down right now. So maybe they will. But what's more important to me right now in regards to the real estate market are these dates I'm gonna put up on screen right here for you in 2023. And they're important because a lot of buyers and sellers that are kind of in the market right now, and I say kind of because not fully committed, they're looking for some clarity as to when and how the interest rate will shape up before they make a move, because it's a really critical move, right? Now, the critical dates on the 2023 calendar year, I think, will be March and April of next year, and I'll get to that shortly why. Now, if you found any of this content useful, it means other people will as well. So make sure you help me spread the knowledge by smashing that like button and also sharing this with other people. And while you're at it, just do me a solid and subscribe to the Prime Property channel so you know when I drop awesome content just like this, where essentially I'm explaining you kind of like what's going on in my mind and what I think is to come in the short term in the real estate market. And if you are looking for some expert help on how to kind of navigate this real estate market, because I know, I keep saying it, but it is really, really weird depending on what you're trying to do. It may be warrant that you do something. It may not be warrant depending on your circumstance. And you can have a chat with me using the link that's on the screen right here. It's www.chatwithzen.com. Okay, so let me give you kind of a little bit of intel on what's happening in the market right now. As I've said in the past few weeks, prices are stable. They're not really going up. They're also not really going down. And that's mainly due to the fact that we have the 20-year low in listings, like new ones, and you combine that with 20-year lows in sale, it's kind of balanced, right? So right now, October is shaping out to be weaker than September in terms of sales volume, meaning transactions, which is strange, but prices aren't really dropping because I've been saying this a lot. There's not much quality stuff out there to buy, and there's a bunch of relists from the spring. So I'm still seeing good houses go in multiple offers. I even saw one go in bully offer last week, and they're all holding offers. But I'm also seeing condos slowly starting to weaken by the week. Inventory is building up, especially in the 4 and 6 segment. And the reason we're going to see prices continue kind of trading sideways, meaning they stay the same, they're stable, is likely we'll continue seeing record low new listings, and the buyer pool continues leaving as the year comes to an end, basically negating one another and kind of keeping it level flat, right? Now, the sellers will probably terminate because they think, keyword, think, 2023 spring will be a better opportunity to sell and are likely going to hold out. So even if rates are tight and they don't move right now, I suspect they will survive, especially if they have a static variable or kind of tons of equity from buying from like before 3 years ago. The real question becomes, where will mortgage rates be in spring when these potential new listings all come on market, right? As I was saying earlier. Remember these dates that I put up over here? If we see tons of listings hit the market after March 8th, April 12th of 2023, which are the rate announcement dates, I think that will probably kibosh the spring market, and that's when we'll start seeing softness in the pricing, meaning prices will go down. The buyers will get spooked by the higher rates, and there's still some uncertainty of when they'll stop hiking. Tons of listings are going to be coming and rolling over from 2022 to 2023, and we'll finally see an oversupply of active listings, which will force the prices to go down as inventory grows, right? Now, when you mix that in with some of the issues I think we'll see coming from the B lender and private renewing side in spring market, as they're going to be basically doubling their interest rates after that 1-year renewal term. And let me be very upfront, I do think there'll be some distressed sellers here and some deals to be had at this moment, but more on that next week. Plus, there's going to be a lot more condo inventory coming to market as we're slowly starting to get the 2017 and 2018 record sale buildings complete after some pandemic delays. And that's going to be a lot of supply from what it looks like right now with low demand if interest rates go up on March and April. So I think we'll start seeing the weakness in the condo segment first, and that'll be kind of the leading indicator. But at the moment right now, inventory in the 4 and 6 condo is building at a much faster rate than freeholds. So these are the things I'm kind of monitoring right now and call it the next, I don't know, like 3 to 5 months. And this is what I think will happen. Now, this isn't all meant to be kind of like a doom and gloom, as obviously the buyer sentiment can change if, the Bank of Canada stops rate hikes and so does the Feds, right? And then 2023 flattens off. Remember, many people, including myself, right, so-called experts in our industry, thought we'd get a surge of listings from like trigger rates, people who couldn't sell in spring, relisting in fall, and then you get your fall market bounce back. And last month, it turns out we were all wrong, and it went the opposite direction, and we got a 20-year low in new listings. Nobody wanted to sell. So it's anyone's guess as to what happens next, right? As new data comes in, like I've been saying a lot, new output comes out, and there's a new outlook. And that's like generally just the best we can work with right now because everything is in flux. Hopefully this gives you an idea of kind of where my thinking is for the real estate market after the latest Bank of Canada interest rate hike. And let's just call it the chicken out hike on their 75 basis points. Now, if you're looking for some help on how to navigate this market, make sure you book a call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya.
Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.